Wake up, buy here, pay here people. It's a beautiful day. Go grab yourself another cup of joe and say hello to Jim and Michelle Rhoads on the Buy Here, Pay Here Morning Show. Take it away, you two.
Happy Friday from
everyone.
Guyman, Oklahoma.
Yeah, welcome. Happy to have you in the guest bedroom / office / whatever.
We're getting ready to celebrate Jim's mom's 40th work anniversary today. So
pretty big deal.
It's like, who does that?
Yeah,
that's pretty amazing.
Sure.
And so I'm glad that she works at a law office and they're throwing her a big shindig and
and we're happy to be here. My brother's coming in for the weekends. We get to spend a little time with them before we head back to Utah for next week. But I just got a couple of quick updates. We had our first V8 meeting for the month of March last night. That was good. A couple of our dealers couldn't make it. We had 6 dealers there and a lot of great conversation. And then I'll just remind everybody, next Wednesday we have the tribute to Rick Reeves, kind of our tip of the hat from White Hat Way to
put it on your calendar. You're going to want to watch that.
Yeah, we got a lot of dealers from across the country chiming in to kind of say how Rick contributed to their success of many years. Many of them have been in business since the 90s, so it'll be a good conversation on Wednesday. So
absolutely. And then we have on the day after is the White Hat Way webinar. So if you haven't gotten tickets yet, you can use the coupon code Morning Show, no space, and it'll give you 75% off the ticket price.
Right. Well, shall we jump into our topic?
I think we shall. It's kind of a mishmash a little bit.
Yeah,
today.
a little bit. I think we'll spend most of our time on this private money conversation because it was a theme in our V8 meeting last night. And, we've talked about private money before. It's not surprising to me that private money continues to be, a popular conversation because the cost of money is up and there are some factors there that are driving those things. And we, I think we determined it's probably been a year and a half ago that we talked
about private money.
Yeah, about use of private money and how to do that. And that comes up with us because the nature of what we do as analysts, coaches, we're working with dealers on cash flow modeling. And so it comes up a lot of times. The conversation around private money comes in early because dealers aren't quite to the place where they can qualify for some of the, lines of credit. Right. Some of the providers.
Let's just first define private money is if you're going through a local bank or if you're going through someone who has money that that is willing to invest and put some money into your business.
Yeah. And
so it's not the Spartans and the Primalens and those kind of money.
Sure.
But it's things that if you've got a relationship with a local bank or you've got a relationship with someone or
And I think for our conversation today, I probably wouldn't even include local banks. Like that's a different hoop to jump through. Okay. I'm really talking mostly today about private individuals. And so that can include some other private sources, but yeah, the Spartans and Primalens are kind of in the category that I would call specialty lenders. Like they're lenders or finance companies, providing lines of credit for dealers. But obviously, dealers have to be able to reach a certain level. And then the other big thread of conversation, not just in our group last night, but across social media, we see some threads around debt reduction. With the cost of money being what it is, people are kind of trying to figure out how do I ever get out from under this expensive money. And so that's kind of where it comes into play. We've been working with a few dealers on some math, and it came up. We actually decided to do a bonus meeting in our V8 group just because we've got it's such an important thread with some of them right now, just kind of figure out what would it really take. And
the day of like the Rick Reeves days from back in the 90s and the early 2000s.
Wait a minute, I'm from the Rick Reeves
I know
days.
You are, honey. The ability for a dealer to step into buy here, pay here without outside money. There's a lot more money that's needed up front. And so it's a challenge that dealers that are newer to the business experience a lot more than those that are especially the early stage money. But it's, it is absolutely possible to be able to do this without outside money. It's just, it takes a really, really long time.
Yeah, and it takes more cash than it did, pre-COVID, if you want to. I mean, we can talk about what it took to sell 30 cars a month back then. Some of our dealers, we talked about in a prior episode last week about how our volume was up so much, in the month of February compared to past years for a lot of our clients. And so what this starts, some of the dealers were saying, man, but by the time I fund my increased volume, cost of cars, cost of replacing those cars at today's higher car cost, and the funding of the warranty and all the reinsurance for those who had reinsurance, like it just takes a lot of cash. We're all trying to do volume, right? We're all trying to create business, and yet we get to this place where it takes a lot of capital to do it. And while the Spartans and Primalines and those folks have the appetite to do it, they're willing to fund for those dealers who qualify, then it just still is a thing where at the price of money, it obviously erodes the dealers their own profits and positive cash flow potentially, and it also just delays the time that they're going to be able to get free of that debt for those who have that strategy. And personally, I can just say, I think I shared when we talked in the podcast a year and a half ago or so on this subject, is like I've been there. Like as a dealer myself, I was a dealer for 7 years. We used some private money. Some of it went well, some of it didn't go well. Learned a lot in that experience, right, about how to avoid that and any kind of problems, of course. And then the other piece of this is just looking at how to help dealers structure a deal that makes sense for both obviously the dealer and the investor. And I got to say it, Michelle, one of the things that I can say, having been around this business a good while, is that there's a percentage of dealers who don't manage their money very well. They're good at selling cars and they're good at finding cars and getting them reconditioned and turn around and all that stuff, but they just don't make enough desk time.
So define managing money.
Well, it's like planning how much capital is required and budgeting for the capital and cash that does come in, how to allocate those funds to debt reduction or managing the debt or anticipating cash flows, and all those kind of things are, it's hard to find enough desk time. That's part of why we talk about, being able to work on the business. And we're coming off a time of year when, dealers are very busy. They're just focused on trying to take, the farm boy in me calls it haymaking season. Like it's that time of year when it's, it's seasonal. It's time to make hay.
It's Black Friday for
and they're busy. And so it's a time that, they're feeling concerned and frustrated about, missed opportunities. Some of them missed sales opportunities because they couldn't recondition cars fast enough. There's some of that, which can be a function of money. And I think for today, I just wanted to have a chance to dig in a little deeper, especially coming off of that meeting last night. It's like, I just see that one of the problems, like let's make it all sorts of private money. If you want to say a private investor, a rich uncle who is interested in participating in the business, right? If it's some family office that is going to place money in a larger operation, I think the things that we can talk about here apply right up all the way to Wall Street. Like it's like if it's private money or it's non-institutional money, maybe we'll say, then if it comes into our buy here, pay here segment, there are some things that need to be in place. There's some disciplines that have to be built in. And I will just throw in a word, like one of the things that Primaline and Spartan do, and people are frustrated and wish they didn't have to pay as much for money. That's pretty much the market right now is, higher cost of money. And while it's frustrating and it can be difficult to manage for some dealers, the reality is those lenders have done this long enough. The reason they're still around in this subprime sector is because they have some built-in discipline, right? That's just a hard thing for people to think about.
And they require their dealers that they exercise these same types of disciplines, that there's things that they have to be keeping track of and certain metrics that they need to be within certain boundaries.
And also just the way they handle actual assets, like tangible assets, contracts, and how they fund the borrowing base, and all these kind of things are things that cause dealers to have to be disciplined in managing it's just like a forced level of discipline and the structure. And obviously if you're Spartan or Primaline, you're doing that largely to protect your own interest. And in doing that, you also keep the dealer from getting, potentially out of bounds, because again, dealers are busy being dealers and they're not often able to spend enough time at their desk. And I'm quite sure that this is something that, if you're a Spartan and Primaland, as an example,
Mm-hmm.
it's something that you're aware of. Like, they've been around it,
Mm-hmm.
longer than I have, many of them. And so they've seen the same thing. And the reality is they want to be able to fund dealers, and so we got to be able to try to find those solutions. And then dealers want to be able to utilize capital and grow. We've talked in the past about dealers, different approaches to debt. Some have more aversion to debt than others. We had 2 dealers on the screen during our live event, our dealer roundup, last month, and you could see that there are 2 dealers, both very successful, but different strategies around debt. We had it in our meeting last night. Different strategy outlook around debt. If you're a dealer who wants to reduce debt, if you want to get away from debt, or could build a strategy to reduce debt or replace expensive money with less expensive money, then there's just some pieces that have to be in place. And that's really about just making some desk time. It's about, finding some people to help, do that pro forma, do the projections that are necessary without, stunting growth. I mean, we're obviously always trying to help clients create all the volume and business opportunity they can. And then in addition to that, they want to be able to, some of them want to be able to reduce the debt that they've got. So it's something that we've done. You've seen me do it. It's like I come from a background of helping dealers do analysis on this sort of thing and building strategies and projecting cash flows. And I just can see that one of the things, if I were personally loaning money to dealers, there would need to be some discipline built into the structure, because it's just the nature of the business, is like just having a way to make sure that dealers don't get themselves out of bounds in terms of their leverage.
So when you talk about building in structure, what kind of things are you talking about?
I'm really talking about, but typically what I would be recommending is a weekly settlement process, which is kind of, there's a lot of administrative
time and
with some of these lenders that we're talking about, it's more like a daily kind of thing. Like, these dealers can actually draw on their lines of credit more than once a week, in which case there's got to be an adjustment. There's got to be a quick accounting of all the assets and figure out what the dealer's eligible for. And I'm really saying at least a weekly process. As we know, we see through V8, dealers have a hard time getting to their desk often enough to submit stuff for us on a simple monthly composite, right? And so to be able to do a weekly thing is important. And I can just say that, Michelle and I are not brokers. Like, we don't broker money. We don't get paid as brokers. There are very specific rules around that, and that's really not where our interest is anyway. What we have done and can do is provide a solution where we're sort of a watchdog in between a private investor and a dealer, so that we can fill a role of analysis and sort of confirmation that the assets are performing as expected, that the cash is being managed and allocated in a way that's expected. And so this is kind of, it's not exactly a borrowing base in our case, but it's similar in that you're helping to introduce money privately in a way that can make sense. And I can say that one of the other things that happens in our business, it's a pretty easy for a dealer, when I say easy, there's an opportunity for dealers who wish to do it to be able to sell a private investor who's not familiar with our industry, to sell them on
we've
how
seen
rosy
we've seen that happen. But it usually it requires some level of being able to communicate and educate whoever it is from the dealer. And so there have been times we've seen dealers that are so great at that they have all of their, they can string together data, and they've shown, this is what it looks like. This is what I've done in the past. All of that, again, measure, because it's hard for someone who wants to, that you're looking at to put money in. If you haven't been keeping really good track and measuring and watching and being able to chart out what kind of how money moves in and out of your business, that's a harder sell. But so we've seen some that were just incredibly articulate and had the data. And then we've had opportunities for those that are looking for money that we've been able to kind of help them communicate that with the people that they're stepping into business with, or being able to educate the dealer on, here are the things that would be helpful for you to communicate with people that are not familiar with this industry? Because your Spartans and Prime Lens, they know the industry inside and out, but there's a lot of other people that don't. But once you can kind of talk to them about that, like you said, there's a really rosy picture and a rosy outlook on this. I
think what happens is when dealers are newer to the business, they go through what is often called a honeymoon period. I'm sure you know what I mean by that. It's like the rosy parts early on.
In a honeymoon period?
Are you and I? We can be.
Okay.
If we choose to. No, it's like the part that they talk about in the buy here, pay here space is like early on. It all looks rosy. Like it all looks like there's so much gross profit. We're not yet seeing all the charge-offs in the portfolio. You know, we're not yet seeing the price of maybe not handling collections well. And so it looks good. It feels good. The margins are excellent.
And it's like that cash element is something that I think is kind of intoxicating too.
The profit side.
The profit side.
Too.
And so you see a lot of times it's the cash is coming in and it's like, oh my gosh, we've got all this cash, and then it gets spent on things that are not necessarily growth strategies.
I think the kind of the white hat element to all of this is one of the things that people know. You've seen it, I think, but I've certainly worked with dealers, and dealers could confirm that when I participate, and I've been at these meetings where a potential bank is there with the dealer and might have multiple partners there, whatever. And people know when I'm there, I'm not sugarcoating. Like I'm trying to make sure everybody at the table is prepared.
Transparent, both.
Just don't sugarcoat the thing. Don't oversell it, because that just puts potentially us in a difficult place. Which, imagine I'm sitting there with a dealer, you're the dealer, and I've got an investor lender there. Then, when we oversell it and we get them excited and they come in, that could potentially end badly for both parties. And that's not a scenario I want to be a part of. So it's like we're trying to help dealers avoid that scenario. Don't sugarcoat it. Don't oversell it. Make sure that, and sometimes they don't know that they're overselling because they're new and they don't realize they're in the honeymoon period and all feels wonderful and look at all of the sales and gross profit we've created. And so we see that. We've seen some of that in social media, right? Where people are out there excited about their volume of business.
And it's great to be excited.
No, of course. You got to create the sales in order to build the business.
Yeah.
It's just that, we can say it here, like sales is the easy part. Friends. I mean, that's just
it really is.
And our Spartan and Prime Lens know that. It's not, that's the easy part. It's like, but it's underwriting the deal properly, managing the collections, managing the cash flow. I didn't say anything about profit, right? It's like, it's managing the cash, managing the assets, being able to anticipate. But dealers, I got to tell you, you got to be able to get enough time at your desk.
Well, and that's a major piece is, we did a thing that was about 2 years ago that it was like September of 2022. So go back into the history, and I've actually was talking to Amanda Sanchez recently, and she's like, you should do that again. We did a Monday series on how to free up space to work on your business instead of being in your business all the time. And so every week we had actionable steps and things that can help you to be able to step away, even if it is for, maybe 3 hours a week, or whatever, to be able to step away from working in the business and work on your business. Because I can just say that from what we've seen and from my own personal experience, as we've done what we do, 3 hours, if it's really good quality 3 hours a week working on your business, you can do massive things. And as long as you are undisturbed, uninterrupted, and you're not watching the auctions as you're doing your thing, or that you're really in your business, or you're working on your business. And it's those kind of things that if you're looking for money, it is very important that you spend some time. That's an on your business thing. That's a very on your business thing. For sure. And
it doesn't mean it has to be the dealer crunching the numbers and running the tallies on the these weekly things we're talking about. It's just that somebody's got to do it, and we got to make sure the information is timely, and that in order to protect this private investor, You've got to be able to manage the money, know, and be able to be honest so that you don't find yourself in a difficult place where, suddenly we had a difficult week and we took some extra charge-offs and we owe this private investor, depending on the structure. There's all different ways to structure this. And I think, you and I have talked about this. It's been a while since we said, I often tell dealers that are new to the business, there are two types of structure that I think are really going to be, that give you a much greater chance of success. Okay. Yeah. One is going to be the structure of the loan to the consumer, right? How the loan is going to perform. The deal structure has a lot to do with that. And so we've got some margin for error in that one. The other type of structure is the structure of the capitalization of the company. So private money would be certainly no exception. And, if we have a private investor, that's wonderful. It provides us more flexibility. And, maybe some of these other types of finance companies or lenders might. And to me, the flexibility is a double-edged sword. Having flexibility is beautiful. It's when we have too much flexibility that we can get ourselves in a pickle by not, making sure we stay on top of the assets and what are the qualified earning assets? What's our method for making sure we stay in ratio? That's a big thing I always try to emphasize. We've seen it. You've been there whenever I've urged dealers to create structure that would create that kind of discipline in their model, and they sort of dismissed it like we got this, we know how to do this, and some of those didn't go very well. So it's like when we don't create that structure, when we don't create that discipline in managing the cash flow, dedicating the cash flow to resolving the debt and protecting the investor and making sure things stay in a favorable ratio. Again, I think you start to see this is where the Spartans and Primalins have their methodology kind of in place where they verify assets and they measure analytics and that sort of thing. And so this is part of what I would just say, and we don't need to spend much more time here. I would say this conversation will never end. Like it's, we have to find a place to move on. But I would just say that the thing that we've talked to some dealers lately who are approaching retirement and contemplating selling. And so now it's like, how do you, if you were to sell and you were to finance the sale of your business to another party, it's similar in this way of like, how do I make sure if I'm the dealer that I can finance that and make sure that I can track how the business is performing? So this is the part that I would say, just know that one of the things we can provide is more watchdog. We're happy to make connections, but we're not trying to broker in a situation like that. What we would be interested in doing is providing that sort of watchdog layer between investors and would be dealers and investors, or in this case, buyers and sellers. Being able to step in there and play a watchdog role is important. Whether it's us or somebody else, it's a really important element. It's an important element. Create a third party scenario where you can make sure that we've got a way to track those things and know. I always say that kind of when the wheel's starting to wobble, we got to make sure we can identify that and catch it early and start to deal with it so we don't find ourselves in a really difficult spot.
And I would encourage dealers, if you are thinking about doing some private money, and like I like the idea of a watchdog. Typically, your local bookkeeper or CPA is not someone that is, unless they're very versed in buy here, pay here.
Yeah, and even then, they're really not equipped to do the parts that I'm talking about. We're talking about more like KPIs, analytics of the actual portfolio performance. So that's really not where most of your CPAs and accountants live. This is more real time, certainly weekly kind of, settlements and this sort of thing where there's and it ties back to the financial strategy that was created. So most accounting firms that I've dealt with don't really have a solution like that. And, it's not something we do. We have some clients we provide weekly performance reports for, and it's not necessarily in this context, but they benefit from that because they have lines of credit. They're able to see their performance. We're able to, with one of our clients recently, use private money, project their ratio, at their current portfolio performance. We were able to say, okay, across the next 24 months, at your current rate of portfolio performance and your current rate of debt reduction, your ratio looks to stay favorable. But that requires that discipline, right? To make sure that we, actually follow through on whatever the plan is. So there's different ways to do it. I think we don't need to go into too much depth, but I certainly over the years have adopted a method that I recommend to all of our clients and anybody else who's stepping into this situation between investors and between investors and dealers, because it can be a really beautiful arrangement. Investors can make a nice return, and then you have this thing to overcome. I mean, most of us, when we think about subprime, the word subprime, which is our sector, most investors are going to have a negative connotation around that word because so many of them got burned. We heard about, retirement funds being, wiped out practically back in the subprime crash of 2008. That one was around real estate, but people still, and I still use the word because I just kind of like to say, look, it is subprime. That is the sector we're in. I mean, I just don't sugarcoat it. That's where we are. Doesn't mean it can't work. Doesn't mean we can't mitigate risk and make it work for everybody. But it's just important to, to not sugarcoat it. And say it like it is.
We have if you've got questions about this and would like to be able to run some things past Jim or whatever, you can go to jim@whitehatway.com. I noticed that your phone number's been taken. Oh, wait, there's another one right here.
Okay.
Need help? Call or text us at 903-816-0216. If you've got questions or something, and that's something that you're looking at doing, it's an interesting thing as a observer. I'm married into buy here, pay here. It's like Jim, been a dealer, loves analytics and loves the spreadsheets and loves all of that kind of stuff, and also really understands the space. So if there's anything we can do to help you, please feel free to reach out. But just make sure that like Jim said, is you're taking some time every week, and we're just off of a really big Black Friday kind of with all of our tax return money coming in, and it's a good time for us to, as those things start leveling out a little bit, is finding ways to be able to create more time for you to work on your business instead of being in your business all the time. And we work with dealers all of the time, and some of them are like, they love the sales process, so it's like we're not going to encourage them to take that away from themselves so they can spend some time on the floor, or they really love the whatever process. And so it's not about you no longer working in your business, but it's about you carving time out to be able to work on your business so that you can take it forward, pay off debt, get new capital, all of those things that really help us strengthen our businesses.
It's just about creating strategy. And if we're so engaged in the sales department or any other department that we can't make enough desk time to create strategy and create, the plan, a strategic plan, then, we really just kind of end up on that hamster wheel that we're talking about. And we obviously like to help dealers avoid that.
I don't like being on a hamster wheel.
No.
You just never get anywhere.
Yeah.
You're just constantly,
Good morning
to
San Antonio. And glad to have you here, Robert. Yeah, I agree. This is definitely a hot topic, and it's something that we see a lot of opportunity, right? There's definitely an opportunity where private money can come into this space and do a lot of good, have a lot of really positive impact. We know that there has to be some discipline and structure built into that to make it really end well. And, we often talk about, obviously, our clients are dealers. And then we talk about that we're also interested in the success of the consumer through our dealer clients and through the dealers that we, speak to through the podcast and other channels. But now you can also add investors. We're interested in the investors having a good experience, because when they can place money privately through these channels and have that go well, that can be such a great thing for them. And we've talked to folks who are doing it very well. And so we know that there's an opportunity in all that. But I think we also talked about, we were going to touch on some kind of repo policy. Why don't we save that till next week?
Yeah.
And we can dig into that a little more depth.
Yeah. And we've just been, this topic came up too, not just from your V8 groups, but we have seen an awful lot of conversation on social. And so we look forward to having another conversation soon about more of the hot topics and the things that are making a difference. And as we're putting together our dealer roundup in April, which is just right around the corner, we're keeping track of the things that matter right now to dealers. And so if there's a topic or something that you would really like us to talk about, and we've been talking about having the capital, that being another conversation, just specifically about capital for the dealer roundup in April. But if there's something else that you would really like to see, let us know. We do keep track quite a bit on what the big conversations are on social media. So, and
as like last time, there are a couple of topics that are coming into focus. We'll probably do 3 sessions again in the next month's dealer roundup. So yeah, we're happy to hear from folks on what other subjects, but we'll be happy to hear
and don't forget with the events that we do, the webinars and the dealer roundups, if you have a ticket, that means that you get the recordings afterwards. So if you're in and out and all of that, you will have access to all of those. So it's and so we know that life happens, and sometimes you might have someone call in sick, and so it's like, I gotta be doing this instead of doing this. So we get that, and that's
Lord knows I've accepted the invitation, a lot of webinars, and then don't attend, right?
Exactly.
You get busy.
So we will be, for any of the events like the webinar that we have next week on, people don't quit jobs. How to keep your talent sticky, the ones that are valuable. And so that's next week. And so anyone that has a ticket for that will be getting the recording, so you can rewatch it. You can pick up on the things that you missed out on. You can even set your team around and put them in front of it and have them watch it, because you have access to those recordings. And so again, for the event that's next week with the webinar, it's on the 21st of March. It's at 7:30 p.m. Eastern. It's going to run about 90 minutes. And right now, through the morning show, you can use morning show, no space, as a coupon code for 75% off your ticket.
There you go.
So, all right.
So we should sign off from Western Oklahoma. I don't have anything else.
I think that is about it. We'll be probably in the Denver area on Monday to broadcast for our Monday podcast there, but I guess we'll be permitting it. It's crazy out there along the Rockies. So, hey guys, thanks so much for joining us. We hope you have a great weekend, and finish this tax season with a bang. And we will be seeing you all on Monday.
Monday.
Guys.